Hey traders, Gavin McMaster here from Options Trading IQ, and I'm just going to give you a couple of updates on my Aussie wheel trades. Before I do, just a quick reminder that everything discussed is for educational purposes only, is general in nature, and does not take into account your financial circumstances. So the first one is on Woolworths. I started this one back in October. The initial trade was a put sale at 33.12. The stock's down about 10% since then. I subsequently sold some more puts down at 29.66, pretty close to being at the money. But given they expire in a couple of days, I'm pretty confident that they're going to expire worthless. So I've sort of gone ahead and preemptively sold some new puts for March expiration. And you can see here generating in total about $550 in option premium. I'm down about $300 on the stock purchase that was assigned at 33.12. Overall, P&L is pretty flat, even though the stock's down about 10%. So that one's progressing pretty well. I don't mind taking ownership at 29.66 anytime between now and March. That'll increase my yearly dividend income, which is going to be great. So that's part of the benefit for me of trading some of these Aussie shares is they pay high dividends. So they're really perfect for the wheel trade, and you get lots of tax benefits and things like that from trading Aussie shares, for me anyway, being based in Australia. So the liquidity is a lot better these days with Aussie options. Pretty easy to get filled and to roll and adjust and all that sort of stuff. If you're based in the US, obviously that's not overly relevant to you, but the process is similar. You can apply this process to any US stock or ETF. So, yeah, basically this one's progressing pretty well. I'm happy with where this one's sitting. Generated about $240 in premium here this week for selling those options. The next one was Woodside. This one was started November last year. The stock's down about 12%. I'm up about 2.5%, so doing reasonably well. The initial entry wasn't ideal with selling the initial put at 29, so I got assigned at 29, got assigned again at 24. So the beauty of the wheel strategy is you're kind of dollar cost averaging and generating lots of option premium and dividends as well. So with the first tranche assigned at 29, the second tranche assigned at 24, the average cost basis is 26 and a half, and the stock at the moment is at 25.77. So even just from the dollar cost averaging on this particular stock, I'm almost back to break even. And then with the option premium, I need to go through an update if there's been any dividends as well, actually. But you can see here, I rolled this one out. So this was the initial one, the 29 put for September expiration. I ended up buying that one back because I wasn't ready to take assignment, rolled it out to December. So that did buy me a little bit more time, but I still did get assigned. So that was the sort of first tranche. And then the second tranche was this one selling at the 24 strike, which also got assigned. But you can see here in total, I've generated $595 in option premium. And again, going to be getting some pretty high dividends there as well on that one. And also happy to take assignment here again at 24.50. That's for the March expiration. Looks like those January ones that are sold here in November are going to expire worthless in a couple of days. So sort of preemptively sold some new puts out in March. Third one I did this week was on NAB. Had an initial put sale, started back in November, sold 3 puts at 38.50. The stock's down about 5%. I'm down about 1.5%. So down a little bit on the trade, but still outperforming. Reasonably happy with where this one's sitting. Again, with dollar cost averaging, my net cost basis is going to be 37, and the stock's at 37.36. That's if that one gets assigned. If it doesn't get assigned, the premium expires worthless, and I just move on and I can sell some more puts. So either way, I'm happy, and I really try to have that attitude with these wheel trades. If the stock drops, I'm getting to buy a quality company at a reduced price. I'm increasing my yearly dividend income, and I can start selling covered calls against that position as well. I don't think I've sold any calls yet on WDS, but it's had a pretty nice rally in the last week or so. So I might look to start selling some calls up above my cost basis here. So that might be my next move with that one. Woolworths, I've only got the 100 shares, and my cost here on that 100 shares is too far away from the current price. So there's not really any premium there for selling calls. So I'll just have to wait collect the dividends and wait till the stock recovers a little bit. But with NAB, yeah, not looking too bad. Again, happy to take ownership down here at 35.50. The net cost basis on that will be the strike price minus the premium received. I went a bit longer term here out till June, but my cost basis there will be 34.29 if it is assigned, which is a good 8.2% below the current price. So happy to take ownership there at an 8% discount. And in total for the day yesterday, quite a lot of option premium generated. About $797 in option premium generated for the day. So looking pretty good. As I said, I might try and sell some calls here on Woodside. I'll probably take a look at that in a minute. And got some US based wheel trades as well. TLT is one that's given me a bit of grief. Pretty bad entry on this when the stock was at 98, or the ETF. So it's down about nearly 13%. It's pretty much been straight down since I entered that one. Started with a covered call, actually buying at 98.09. Some of you might have seen the video I did on that one. And then I've added a couple of put sales since then. So most likely going to have to buy some more at 92. This one's kind of right at the money. We'll possibly have to buy again at 86. I'm willing to keep building this position as well because I want to increase my exposure to bonds and increase my yearly dividend income. So I may even start selling some more puts down at 82 or even 80. And again, just keep dollar cost averaging. So, for example, the way it works is that was my first tranche. If I get assigned, that'll be my next one, and then that'll be that one. So if I get assigned on all three tranches, my average cost price will be 92. But don't forget, I'm generating lots of option premium here as well. So this is what I would call my gross cost basis. This is again assuming these do get assigned. And then if we take into account the option premiums and any dividends, that'll be sort of my net cost basis. And you'll find that with this dollar cost averaging, generating lots of option premium, generating lots of dividends, your actual net cost basis can come down really, really low. And that's the idea with these wheel trades, is we continue to dollar cost average, sell option premium, and collect dividends, and basically aim to hold these forever and not really sell them. If I do sell calls and those calls go in the money, a lot of times I'll buy those back, sometimes even for a loss, just so that I can hold on to the underlying shares, not trigger any capital gains tax, things like that. And then I'll just sell some more calls at a higher strike price. I did that recently with EWA, which has been an ongoing one. This was started in 2003. You can see the stock's been basically flat in that time. I'm up about $7,000 or about 18%. So this one's working really well. I'll try and show you there's a lot of trades here, but basically I sold the January covered call at a 25 strike, and at the time the ETF was above 25, so I had to actually buy to close that one. So that cost me about 620 to close that out, and then I rolled it out to April, kept it at the 25 strike. Actually, might have been the 26 strike. I'll just need to double check that. So that was something that I'll do with the calls. If they go in the money and I don't want the shares to be called away before it gets too close to expiration, I'll buy those calls back, roll them out to a future month, and roll up the strikes. I'm pretty sure I went up to 26 actually. So if you need a copy of this spreadsheet as well that you want to use, actually I need to leave the blanks on there. I'll provide that in the description below. If you're trading Aussie shares and options, let me know. Would love to bounce some ideas around and see how you're going with your Aussie options. I've been doing it for a while now. I started BHP. I can't remember the first one that I did. This was back in July. So yeah, I think it was about June, July last year that I started doing Aussie options, and so far so good, working pretty well. As I said, a couple of trades that are down. Woolworths is flat. WDS is up slightly. NAB's down slightly. Wesfarmers up a little bit. BHP pretty flat. So, not a lot going on so far. Pretty slow moving, but I'm really, the main aim for me is to keep building these underlying stock positions and increasing my yearly dividend income, and then trading options premium around those core positions. So I hope you enjoyed the video. If you've got any questions, please reach out. Would love to hear from you, but otherwise have a great day.